Hello guys, good morning. It's your favorite Coach Larry FX Academy as usual. We actually have this particular pair we are going to be discussing about, which is the Volatility 10. So I noticed I've not spoken about this pair in a Blade. Sorry guys. So I noticed I've not spoken about this pair in a while, and then I decided let's just do a little talking about this particular pair. Now, I clearly showed us or reported to us that we had a break of trend line at this particular price point. Now, after market gave us this break of trend line, we clearly understood we are looking out for price to get to this particular low based on the break of trend line. That is normal, and then we understand we are coming from an uptrend. So that is another confluence that helps the that's confluence in terms of we are expecting a break of trend line to this the trend to drop to this point basically. So now one thing we can easily do is we can come down to the lower time frame in order to mark up our entries we got from this particular point to the downside. Now we go to the 4 hours time frame. Now on the 4 hours time frame, we actually went down further to explain all the entries we got from here to the downside. But I won't be doing that on this video because I think I've done that on other videos. You can go and check them out on videos I posted about volatility 10. So for this particular video, I actually just want to analyze what created this move. We took the entry and we posted it on the community again also. Now, what we saw was very straightforward. Market on a downtrend, which is good. We always like to see price give us liquidity grab. Now, liquidity grab is actually markets taking out the initial sellers. You understand? So whenever market takes out the initial sellers and gives us a break of structure to the downside, we want to enter the market. So I'll simply mark this point here as our BOS and this area as our L, which we'll call our liquidity. Now, so price having done this, it gave us a very wonderful reaction that we should be looking for a sell. Now, in addition to all of this, price gave us our swing low and our swing high and our swing low. Now, our swing high, you would know we mark it as our level A, and the swing low, let me duplicate this guy. I want to use a capital letter A, and our swing low, we mark it as our level B. B. So now I'll simply do something, take this guy up. So we mark our swing low as our level B. So okay. So here our level A. So very good. This being the case, one other thing we saw on the market which helped our confluences was we saw that market gave us a clear order block here on 4 hours time frame, which created a break. Now that only added to our confluence. And then before we took our entry, I'll also show you guys the confluence we made use of in the market before we took our entry. We caught it late, but then it's what it is. So the reason we caught it late was because we took the buy counter trend or a kind of reversal. We took the reversal to this point, and then we expected to take profit at this point. So entry immediately at that point for a sell wasn't really the best decision we could take in the market. So we simply just waited for price to give us a good confirmation so we don't lose money. Now we go to the 1 hour time frame. On the 1 hour time frame, we clearly see that we have price reacting from this other block. This other block gave a little liquidity grab, swing high, swing low, and all of that. Okay, I'll just mark it out so that you guys can see it. So we are not mixing things up here. So now you can clearly see something like that. It happened here. We got our break of structure on the smaller time frame. We got our liquidity grab again on the smaller time frame outside the bigger structure of the market. So this was actually a very good reaction of the market. Now you can see clearly price just got into tapping this point and began to drop to the downside, giving us a bearish confirmation, a bearish candlestick confirmation. But then before we even do anything more on this particular market, we'll simply mark out our Fibonacci. So now when we mark out our Fibonacci tells us that price came into reacting from our 0.618 level. So originally, when we are taking our trade, we simply just blade. Sorry guys. So originally, when we are taking our trade, we simply just look out for taking our trade from this particular price point down. So our entry is going to be exactly at this price point. We put our stop loss here, and then this is our take profit. So this is actually what we looked out for. But before we took our trade, we actually wanted to see a bearish engulfing to understand price is actually heading to the downside. That way, what we simply did, I'll remove this guy so we understand that side of the Fibonacci. Two things: this first block, which I'll label as the red. The first block, which I label as the red, is our other block, while the second block is our 0.618 level. Now, when you go to the smaller time frame, which is a 15 minutes time frame, you will clearly see what happened. So after we got the clear bearish engulfing candlestick here, which was a point for our signal, we got extra reaction of market. Market broke that zone, retested it. Let me go to the 5 minutes time frame so that maybe you can see it clearly. So at this area, you can see what happened. Price gave us a break of structure and retested that zone, and that was the level we took our entry from. You understand? And we rallied down to the downside. So this was the point we took our entry from, and then this was another level I took entries from. You understand? So I actually wanted to still see a good confirmation. We got a break of candlestick here. Price reacted, retraced to the 0.618 level on this smaller time frame. You understand? And that was our entry. We rallied down to the downside. So this is what we have on volatility 10 index, and that was just our trade for the volatility 10 index. I believe I've been able to help you guys answer your question on how we got our entry. So when you repeat this pattern, it always happens and it always works. Now, one other thing you can easily see is patterning our trend line break. So our trend line break is actually from this low to this next low. You're only getting a trend line break here. It's only giving you more confirmation that our entry was right. But using this particular Fibonacci and the other block tells us that we are able to take our entry exactly at the point where market is reversing. So this is what we have for the volatility 10 trade. Please do subscribe to our channel. If you like this content we are putting out there, give us a thumbs up, subscribe to our channel, share the videos in order to help others get to view and enjoy this content. Do have a wonderful day, guys. Bless.